Now, we like to think of this as a U.S. story, but certainly it has come north of the border, with TD the most shorted bank in the world right now. Part of that does have to do with just a natural arbitrage that happens when you have a bank buying another bank. Typically, you short the buyer and you go long the company that they are trying to buy. But there's other issues at play as well. It's trying to buy a U.S. regional right now. There's a lot of anxiety around that sector, even if they are different from, say, the Silicon Valley banks of the world. Let's bring in Mark Sebastian, who's the founder of OptionPit.com and CIO of Carbon Line Capital from Chicago. Mark, thank you so much for joining us. If we can start with the bank narrative, I think that would be very helpful for our viewers who own TD, right? It's one of the most widely held stocks in this country. They're seeing it down 3% and waking up to news that it's the most shorted bank stock in the world. How can that be when it seems like it's nowhere near the epicenter of the crisis?
Yeah, that actually caught my attention as well. You know, it's in the middle of buying out First Horizon, and I think that's creating some of this, as you said. It also is intertwined with Charles Schwab. Take a look at a chart of Schwab. It is just a trail of sadness going straight down since this banking crisis began. And it has me wondering, where's the bottom in some of these banks? Because, you know, this is not a 2008 type of scenario. Everyone I've talked to has said this looks more like an Enron, where there's going to be a few players that really get taken down, but most of these firms are going to be all right. But at a certain point, you have to wonder, you know, where is the money going to start stepping in and buying? We have not seen that happen yet in some banks that are relatively high quality. You know, TD is a good bank. Fifth Third. Comerica, you know, they continue to just slide and slide and slide. At some point, there's going to be a bottom here. You're going to have to hold your nose and buy it, but you're going to want to tread very carefully because there may be another shoe to drop. We continue to see big bearish bets in the option markets on KRE, which is the regional bank ETF. On Monday, New York Community Bank, we saw a massive buyer of out-of-the-money puts, which caught my eye because I thought that was you know, had kind of cleared some of the trouble, and for that amount of put buying to step in really raised my eyebrow.
It's so tempting, right, to look at some of this and really start doing your homework on these stocks. But then again, you're also picking away at the key vulnerability of fractional reserve banking, right? Which is you just assume deposits are sticky, but they're really not. And that's kind of what's happening at Schwab as well, which you think about as trading. People are looking at the return that they get, keeping it at Schwab versus in money market funds and things like that. And they're kind of losing their own deposit base that they use for other things. How do you get confidence around that concept, even if it's a bank? You know, I was just talking about Western Alliance. 70% of its deposit base is insured. And that's not enough, right, to stem, you know, a little bit of anxiety, a little bit of fear.
You know, one of the things somebody brought up, one of the traders I work with brought up to me is looking at the short-term CD interest rates. The higher that short-term interest rate is, the more liquidity needs that bank might have. So a really high 3-month CD might sound really tempting, but that actually could be a sign that a bank is in need of some short-term cash.
And a CD is,
so that's
just
actually
for
something,
our audience, a CD
is a certificate of deposit. It's a, you put money in a bank, a 3-month bank that they give you a certificate of deposit back. They give you an interest rate. You're not allowed to touch that money for 3 months. So you can't withdraw your money out of a CD without taking a big penalty. So that is what a CD is, a certificate of deposit. And that is, I don't know if they do that in Canada. They do that here in the United States. And you're basically locking up your money for 3 months, but you get an attractive interest rate for those 3 months. And the higher that short-term interest rate is, the more risk there may be in that bank. That's something just to kind of keep in the back of your head when you're looking at some of these different banks.
Okay, so having said all of that and expressing concerns that still linger at the sector, are there any pockets that you are willing to put your money where your mouth is and buy here?
I mean, I think that if you go one level down, there's big value in community banking here in the United States. They are the most conservative investors on the planet, conservative lenders. There is definitely some value in the community banking sector. So I'm taking a look at Fifth Third Bank. I think they've gotten pretty darn big, almost too big to fail. Comerica is another one that I'm kind of interested in. I have not jumped in yet, but I'm taking a very hard look at these names and looking to see where, if and when I want to enter. But those are two that are on my radar.
Would you, or what would it take for you to consider a TD Bank, which is not a regional? It has big exposure in Canada. It's diversified. It is not just, deposits and loans. It's got wealth management. It's got capital markets. I think this is why people think it's unusual that you would come for a Canadian bank, because one of our things is they're so diversified.
Right. Well, let's see Schwab go up for a couple of days in a row, and then I'll start having some confidence here. But its relationship with Schwab, I think, might be the problem. Schwab is just, like I said, it just keeps going down and down and down. When that finds a floor, then I'm going to jump in. I'd be interested in jumping in with TD with both hands.